Hi everyone, welcome to the channel. Today we're going to be looking at the company Ruger, ticker RGR. They are a firearms company that I've been tracking for the past several months, waiting for the stock to fall to my buy-in price, which I recently bought into. Also, they're a company that pays out dividends as a percentage of their earnings, which has been roughly about 40% of net income, as opposed to a fixed amount. In this video, we'll look at Ruger's financials, perform a stock valuation, and use computer modeling to forecast the 52-week stock movement. But first, since I do own this stock, we'll look at my recent purchases. So let's jump right into it. Here's my recent investment into Ruger. You can see I made it on November 21st at just over $45 a share. And the closing price for that day is $45.50. So up slightly, but again, this is not a stock I've owned for a considerable amount of time. So we'll see how it plays out over the coming weeks. Now, this investment is just over $3,600. I would like to build this up anywhere from $5,000 to $10,000, but I want to see how the stock moves over the next couple of weeks. And I would point out that prior to November, the stock was trading typically in the low to mid $50 range, but they did have their Q3 earnings call on November 2nd. And during that call, the management did inform that the profitability has declined year over year from Q3 of 2022 to Q3 of this year, with their gross margins falling almost 30%. And that greatly impacted the stock, which dropped about 16% after that. And that's when I bought in at $45. Though it has traded lower early in the month in the $43 to $44 range. Let's move on and look at their financials. Then we'll do their stock valuation, followed by the computer modeling for the 52-week forecast. Here's Ruger's financials, and first thing I'll point out is this far right-hand column. This is the trailing 12 months, so taking into account Q1 to Q3 of 2023 and Q4 of last year. And we can see for both 2022 and the trailing 12 months that many of these data points have been on the decline since 2021. The only exception here is the share count, which has pretty much been flat, and then book value per share, which has declined from 2021 but flat over 2022 and the trailing 12 months. Now, also though, I'd like to point out is in 2021 was kind of an outperforming year for Ruger, and we can see here revenue was the highest it's been over the 10 years at 731 million. The next closest was back in 2016 at 664 million. Same thing, net income 156 million. The next highest was the prior year in 2020 at 90 million, and so on for these other data points. So if we don't take into account 2021 and we look at 2022 and the trailing 12 months, it's kind of in that range for most of these data points that Ruger's has been seeing. We see revenue 596 million for last year, current 12 months 562, and over the prior years, it has typically been in that 500 to 550 million dollar range, with the only exception also being in 2016 when it's in the 660 million. And if we look at averages from 2014 to 2020, first for revenue was 537 million, and last year 596, and currently tracking 562. So it's higher there. Net income during those prior years was 59 million. Last year 88 million. Currently slightly lower at 57 million. If we look at earnings per share during those prior years, that was $3.21. 2022 was almost $5. Currently $3.20, so pretty close to that average. Let's go over to book value per share. That was $13.40. So currently, both last year and trailing 12 months, $17.80, so higher. And free cash flow for the prior years was 70 million, and we can see here for 2022 about 50 million, and trailing 12 months 2022 million. So that's probably the only data point that's significantly lower from those prior years, not taking into account 2021. But let's look at some other data points right here now. Net profit margin. So I typically like seeing companies that have over 10%. And Ruger, though they had a few years that were slightly under, but mostly they have been over that 10%, except for 2015 and 2020 when they were in that 7% range. But other than that, they've been over that 10% most of the time, and many times close to 15% and even getting into that 20% range. And then another one here, return on equity. So Ruger's in the leisure products, and I couldn't find an industry average for ROE for leisure products. But since they are in manufacturing, and let's assume machinery, which is typically in the 15 to 16% range, we can see here they've been above that every year, except in 2019 when it was slightly under 12%. But other than that, they've been in that 20 to even 30% range. Trailing 12 months is slightly lower, almost 18%, but above that average for machinery. Now let's go a little lower and look at some more data points on a graph. It's a little easier to see. So on this graph, I like to see these per share values going up and to the right, a nice steadily incline. But as we can see, it's a little choppy on some of them. And the first one to look at is this revenue per share back in 2014 at around $27, and now currently just over $30 per share for revenue. So it has been going up, just a little choppy. Now, let me remove that so it'll be a little easier to see the other data points. Okay, so with revenue per share removed, let's move on to the red one, book value per share. And we can see back in 2014, just under $10 and currently getting up to that high teen range. I think it was about $17, $18 per share for book value. Then free cash flow per share, we can see back in 2014 or 2015, it was in that low single digit range. And up until 2021, it was typically growing, getting to the high single digits, probably about $8, $9. But free cash flow, as we saw a few moments ago, has been on that decline for 2022 and the trailing 12 months. So this is a big area that Ruger needs to improve on, is their free cash flow to get this tracking back up to that high single digits and hopefully over time getting up above $10 and into the teens. In green, earnings per share back in 2014 about $2, and now getting up towards that $5 per share over the past 2 years. Now, dividends. So, as I mentioned in the beginning, they pay their dividends based on net income, typically about 40% range. So, this will be fluctuating based on their net income for the year. And then moving on to the last two, first one in orange is return on equity. So this would be the percentage on the right. And as I mentioned, I wasn't able to find a average ROE for the leisure products industry, but I did find for machinery, which Ruger is basically in as well, manufacturing firearms. And for the average for machinery is in that 15 to 16% range. And we can see here Ruger is typically above that, in that high teens to even 20% range. We can see back in 2021 it was pretty high, getting close to 50%, but that was that outlier year. And net profit margin, I like seeing over 10%, and we can see Ruger is typically over that 10% over the past 10 years. So these per share data points have improved over the past 10 years, going up and to the right, just not as smooth as I would like to see it. But let's move on and look at their evaluation and then go into the computer modeling to predict the 52-week stock movement. I previously valued Ruger back in March of this year, and at that time I had an intrinsic value of just under $62 and with a margin of safety at 75%. The valuation came down to $46.37, and that was using a growth rate of 3.5% over 9 years at a 10% discount. Now, for the latest valuation here, you can see I am using a short-term growth of 4%, and that 4% is similar to the net income CAGR over the last 10 years, which is slightly higher at 4.4. So I'm dropping that down to 4% and using that over 10 years with the same discount rate of 10%. And based on their trailing 12 months, the actual intrinsic value dropped slightly down to just under $61. And with that same 75% margin of safety, valuation is $45.66. So about where I recently purchased into the stock. Now, some other data points I like to look at right here is this return on invested capital. I really like seeing this over 10% during these time periods. And we can see they're well over that 10%, generally over or really over 20% and sometimes into the 30% range. So that's a really good sign here in how they manage money and return valuation to shareholders. Book value. So we saw earlier the book value has been kind of choppy, and actually over the trailing 12 months it's pretty flat. So we can see here the 1 year is 0%, but I would like seeing these over 10%. Same thing for all these data points here. I generally like seeing these over 10%, but really return on invested capital is the highest priority out of the five. Earnings per share, we know that dropped year over year, along with sales and free cash flow is really the one spot they need to pick up on, as it has been on a steep decline over the trailing 12 months and the prior year. But let's scroll down and look at some other data points. Right here, PE ratio, so just over 14. So in that value opportunity, Ruger does not carry any debt, so debt to free cash flow is zero. As I mentioned, dividends is based on net income, which it's basically about 40% of net income is where they try to target. Shares, so it's dropped 10% over the last 10 years. And then net profit margin, as I mentioned earlier, I like seeing at least 10%, and we can see over the past 10 years they're about 13%, and last 3 years just over 17%. So some mixed data points here. However, I think I'm being pretty conservative on my valuation at $45.66. And also return on invested capital. I like seeing over 10%, and we can see Ruger is over 20% and even in 30% for certain time periods. So I do feel there's an opportunity here with Ruger to recover with their valuation and the actual stock price. But let's move on and we'll look at the 52-week forecast using some computer modeling. So in the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here and random forest. And this is based on this latest Monday, November 14th. And the far right-hand column is the stock price, which closed at $44.71. The column right next to it, that is the ETF for the S&P 600, since Ruger is a component of that. The other columns are just other various data points used for the analysis. Now, I did copy all these results and put it into Excel, and we will look at it there as it's a little easier to see in a graph. But let's just scroll down and look at just the 52-week projection, and we can see November of next year. M5 rule is showing a stock price at just above $64. Now, let's look at random forest real quick before we go into Excel. And same thing here as of November 14th. Stock closing at that $44.71. And scrolling down 52 weeks, excuse me, it's closing a little higher at $68, about 37 cents. So we can see both these methods are showing a pretty close forecast out 52 weeks. But let's just jump over to Excel and we'll look at it there. So back in Excel, we have the graph for Ruger showing the stock price movement. And first I'll point out is this vertical red line represents actually this most recent Tuesday, November 14th. So everything to the left is the historical stock price, and everything to the right of the vertical red line is the forecasted. So obviously then the blue line is the stock movement. And if we look at the history going back to January 2009, we can see the stock was under $10, probably in that $8 range. And it had a nice run up going to 2014, getting it to $80. But since then, it's had these peaks and valleys, so somewhat of a cyclical movement of the stock. So with that being said, buying this stock at the right price is ideal. And you can see here, back in October 2014, the stock dropped basically 50% during that year, getting to about $35, and then running up again into 2015, uh, into about the July time period, getting back up to $70. And we can see this throughout the years. It has these, as I mentioned, these peaks and valleys. So right now we're out here in November of 2023, and it's looking like now it's in that valley period, going from about back in 2020, July of 2021, at around $85, and then since then dropping down to where we are today in that mid $40 range. So I'm actually going to jump over to another graph so we can look at the projections a little closer. So looking at the M5 rule first, and we're going to look at everything to the right of the vertical red line for the forecasting. And so where we are today is in that $45 range, showing right there. And M5 rule is showing a quick recovery going into Q1 of next year, going up just over $60 a share. And then we can see it's hitting these slight peaks and valleys, going out to 52 weeks, getting into probably the mid to high 60s, and then dropping down to just below 60. And actually in July of next year, getting a little lower, looks like down into the low 50s. But out in November of next year, closing at around $64, $65 range, which would be a 36% gain from where we are today. So M5 rule showing a nice recovery. And we'll jump over to random forest. And as we mentioned, when we're looking at the computer modeling software, both of them, or both methods do show a pretty much a bull run or pretty optimistic outlook for M5 rule. So let's look at the random forest. So random forest, same thing. We're going to look at everything to the right of the vertical red line. And that also has shown a slight recovery, getting to just above $50 going into January of next year. But the recovery taking a little longer, getting up to that $60 range, and actually out in November of next year, closing a little higher than M5 rule at $68. And if this does pan out, that'll be more of a 45% gain, recovering the losses it has seen over the past year and a half, 2 years, where out in April of 2021, we can see it was getting close to $90 in that high $80 range. Now, let's take the average. So obviously both these methods are pretty optimistic. So that average is also going to be in that $60 range. So the average of the two methods out in November of next year is showing the stock at about $66, which would be slightly above a 40% gain from where we are today. To recap, Ruger has struggled recently with a few data points, particularly free cash flow, which has been declining since 2021. However, they still maintain a high return on invested capital, and with the stock price where it is today at around $45, it does appear to be undervalued. Also, as we saw, this stock moves in cycles and appears to be at a low point that can have a strong recovery. And with the computer modeling, both the M5 rule and random forest each shows the stock recovering in the $60 range in 2024, which would be a nice return if that does pan out. So I hope you enjoyed the video and gained some useful information. If so, consider subscribing, and hope to see you next time.